Okay, good morning, everyone. We're going to go ahead and get started. Hopefully Ryan's still there, and I see Rob. So we do have your mics and videos muted for right now, so that while our presenters are speaking, we're not distracted by what people are doing on their videos. So welcome. Today is April 20th of 2020. Today is our Monday morning meetup. This is our 5th meetup that GGP has held. We've been holding these sessions to try to provide you with an opportunity to share best practices or learn from others on how they're handling specific issues within their businesses. We are open to comments and suggestions and for our further meetups, so please don't hesitate to send us your thoughts and ideas so that we can really work to continue to meet your needs as a small business in our community. Thank you to our sponsors, our annual sponsor, Geauga Medical Center, and our event sponsors, Senator John Eklund, Farmers National Bank, as well as Connecticut. While our presenters are speaking, again, I'll have your microphones muted and your cameras turned off, but you can submit questions during the session via the chat function on Zoom. So if you haven't found that, it's at the bottom of your screen. Feel free to submit your questions in the chat, and I'll be happy to present them to the presenters. Gentlemen, we never did clarify whether you want me to do them during the presentation or after, so I may just interrupt you and do that as we go. I would also like to ask you, if you're calling in, please submit your questions via email to info@geaugagrowth.com. Again, that's info@geaugagrowth.com. I tried to put a poll together this morning, and it didn't quite work because I'm not the primary host of the meeting, but what I wanted to do is ask a couple of questions before we get started and I introduce our speakers. So we're going to do at the bottom of your screen, there's a little smiley face with a plus sign that's called reactions. So I'm going to ask you to click on that. And then I'm going to ask you, are you a representative of a company or are you a service provider to a business? So using the reactions, if you are a company, give me a thumbs up in the reactions. If you are a service provider, give me the clappy hands. Okay, good. So about 50-50, pretty close it looked like. So which of the specific areas involving cash flow are you or your client struggling with the most? I'm going to ask you these two first. Payables, thumbs up. Receivables, clappy hands. So receivables, clappy hands. And then we'll let those clear off. And then if you if you or your client is struggling with inventory management, can you give me a thumbs up? Okay, thanks. So about that, about your answering the question that I just asked, was this a problem of yours or your clients before March 1st? Thumbs up if it was a problem before March 1st. Okay. All right. Good. Thank you for participating in that. So based on conversations that our GGP team has been having with others, it seemed as though today's member meetup focus on cash flow principles would be very beneficial for all of you to participate in. So to help us with this topic today, we have Simon and Ryan Dietrich from SharpCFO. I'm going to tell you just a little bit about them, and then I'll hand it over to them. So Simon has 32 years of experience in the transportation business with 21 years as a CFO. Now he's serving as a CFO consultant, and cash management is a passion of his. Ryan Dietrich has extensive experience supporting businesses in manufacturing, banking, hospitality, and retail. And he's spent time at all levels of finance, driving organizational change at both medium and large companies. So gentlemen, I'm really glad that you're here with us today. I know you're going to tell us a little bit about your company as we get started. And I'm going to go ahead and turn it over to you, and I'll keep an eye on the chat for you so we can bring the questions to you as they come in.
Perfect.
I think I lost the video. Oh, there we go.
There you go.
Okay. All right. Can everybody hear me? I kind of lost video there for a second. All right. Let's see. All right. There we go. Okay. So hopefully I have everybody and everyone can hear me. So this is Ryan Dietrich. We're with, Rob and I are both with a company called SharpCFO, actually based here in Northeast Ohio. We do business in here in Ohio as well as in Pennsylvania. We're starting to get into Michigan a little bit with some clients. And, you know, as much as we all really enjoy talking about, or don't enjoy necessarily talking about, the current business situation that's plaguing many of us in the small business world, you know, it's cash flow is important to discuss whether we're in a crisis or not, right? And there are some best practices that we wanted to make sure we went over. This is certainly, this can be an interactive session. If anybody has any questions, please, you know, please let us know, either while we're going or after the fact, and we're happy to do that. So I think it would be best to give it over to Rob, and we can start in on a couple of the basics. And at the end, you know, we'll have our contact information. If anyone has any questions specific to any issues that we're presenting about, please reach out. We're going to be having some other topics as well in the future, specifically about inventory and receivables and some HR things. So this is simply an overview of the topic. We won't be getting into very specifics in this, but we'll at least give the overview. So okay, if we can go to the part where, you know, we can, there we go. So again, this is a little bit about us. So what we do with our companies, our client companies, we work 1 to 5 days a week, either, you know, fractional to interim basis. Maybe your CFO or controller recently left the company and you need somebody to fill in. We do that, as well as work with some small and medium companies who only need support a day or 2 or 3 a week. As I said, we work in a few different states. We can be either virtual or on location. And as Kim had previously mentioned, our backgrounds, all of our team of CFOs have a minimum of 25 years of executive experience, ranging from small business to large company. So, all right. So then, Rob, I'll let Rob go ahead and get into the actual part of the presentation. Again, if anybody has any questions, please either put them in the chat, or if it's a burning desire that you have to have answered right now, just find a way to get our attention. All right, Rob, take it away, buddy.
All righty. Good morning, all. Thank you for having me being here. I appreciate, Kim, you and your team setting this up. And I think that, in fact, obviously this is your 5th one, which I think covers the whole, pretty much all the time that we've kind of had to make our different shifts here in business and in life. That's awesome and great. And a great thing that obviously you're doing for Geauga and for the partnership. I think, you know, cash, I think, has always been a sustainer. It's always been a lifeblood of a business and organization, and I think especially now it has become, you know, more pronounced and more looked at and more viewed. One of my favorite quote from a standpoint business-wise is from the economist Frederick R. Adler, from actually the 1880s. So kind of shows you how long cash has been prominent as well. And this quote is, "Happiness is a positive cash flow." As we know, cash flow is the in and out of our cash within our business. And as business owners, I think we want to focus on keeping it. We like the in part of it way much better. But we still have to focus obviously on the out also. Provides services and funnels and keeps things going as well. The receivables are the in, but an important part of receivables really have to consider that could become under light now too is the invoicing process. So the more streamlined, the more efficient your invoicing process can be, the faster a service or product that's delivered can become cash. And obviously that's what it's about. We want receivables, but we want the receivables to become our cash. And therefore receivables, they need to be monitored. They need to be tracked, not just in the last 5 weeks, and not just same as cash should be monitored as it should be in the last 5 weeks, but it should be an ongoing daily, weekly process and procedure that is done within a business. You need to know where you are to know where you want to get to. But also with that, there has to be a system too, from the standpoint with the invoices, so that when they're generated, they get recorded. They get the report whereby you know what's open or what you're expecting or what's going to be received, so you can track it from that standpoint. You need to set up a days from the standpoint of when you've invoiced for a service or product as to when you want to be paid. Is it 10 days, 15 days, 30 days? Are there clients contractually going to make you kind of extend out a little bit longer and say 45 or 60 days? And that's where your focus then needs to be, obviously, on the receivables and on the collection of that. Part of monitoring today too, though, is we've kind of developed a little more empathy, a little bit more understanding, and some flexibility, customers and customer needs and what they're going through, and what their ability from a payment standpoint is, and maybe we have to extend terms out a little bit longer for certain ones, and kind of assess and understand that. But the other thing you need to know, the business should know, is you need to know your customer cycles. For example, not all customers are going to pay the same way. You're going to have some that pay fast, some that pay on time, some that pay slow. But part of your planning in terms of what your inflow is going to be from your receivables is the idea of who you kind of expect to pay when and when they're going to pay. Again, it's just a matter of knowing your customers, to know your receivables, so that you can plan. Payables are the out, obviously, and they need to be selected by what's most important or what's the most necessary to pay, especially now. Obviously, going any given week, payroll, rent, insurance premiums, utilities, debt obligations, principal that needs to be paid, interest expense needs to be paid. Obviously, always should be top of the list, but obviously you're going to have specific vendors, vendor partner suppliers. They're going to have to be high as well, especially the ones that are providing what you need the most, in the standpoint of delivering and bringing your product and service to a customer. But obviously you can provide that service or product, and obviously be able to invoice, and obviously be able to collect from that cash standpoint. But in many cases within payables, we're making choices, especially now. There may be a supplier partner you want to pay this week, but you might have to punt it to next week based upon what you know is coming in and what you know has to go out. But part of, regardless, is just communication, and communication with those partners and suppliers as to what's going on and what you need to do, and why, and making them aware of that. The thing flip side kind of holds on the receivables. Wouldn't you want to know from a customer yourself if they're going to be a little bit delayed in getting you paid? So at least, like I said, you can plan and you can understand what you need to do there. I think the other focus with payables, obviously, is you really need to cut what you can cut and what you don't need. Relative to inventory, it's always important to have an accurate count and record of what you have, and what you have in inventory, be it be it raw from the standpoint of what you need to produce your good, or be it from the standpoint of what you have completed from the standpoint that's going to sell. So it is a matter, you've got to be able to track what's used and what's sold. And a big key too is keeping the right items stocked. You don't want to have the wrong items in there. You don't want to have an item that you need from the standpoint to produce or deliver your service that you don't have in stock because obviously you ran out, or something shifted with it, or it was just missed. On the flip side, the other danger is having the wrong items or having what you don't need in stock. Because again, this can be a very big cash tie-up involved with it as to what to do, how to monitor and how to manage that. But it can be a big lockup. So again, you need to know what your benchmarks are, what you need to have, and what your minimal levels are. And you need to know what's turning and what's selling, so you know what to keep in inventory. There may be some items, if they are excess, or items aren't selling quite as well anymore, that maybe you need to do a bit of a liquidation in terms of probably have to sell it items obviously at discount, bunching them or bundling them together with other items and other products, and making room for anything new that all of a sudden is becoming a new customer trend if something has, if a trend or something has switched from that standpoint. Obviously, it all really ties back to revenue, and that's the thing we want to produce. We need to have the revenue from inventory, from other avenues by which to create the cash that we're going to have coming in. And obviously, one way to increase our cash is to increase revenue. So are there additional services or projects that we can now offer that maybe the market wants? I mean, there obviously right now are many stories in the companies that have all of a sudden shifted gears from what they were making, because it's not needed right now, to things that are needed, be it obviously well-known nationally, obviously, are ventilators. There are companies switching from sunless tan, from making suntan, sprayable suntan lotion to making sanitizer. So it's just a matter, there are those types of shifts going on that can be done. But again, discuss with your team, monitor sales trends, if there are any changes in customer needs from the standpoint of additional services or products. And I think a big thing, major issue always, but especially now, is really going to be a matter of quality as well. Despite the remote aspects of working, despite the fact of how we have to provide service, it's still, customers still want and expect the service or the product to be of the quality that they want. With that too, obviously, there comes some cost.
Yeah, I'm sorry. Hey, Rob, my
Yes.
bad. I just want to real quick kind of highlight the last thing about talking about creating new revenue streams. So something that we have seen a lot and heard a lot of is our companies who are just waiting for their government money, right, to come, the PPP or the EIDL, and a lot of us haven't gotten anything yet. I mean, we're a small business too. I applied for our business for the EIDL loan. They checked my credit, and that's about it so far, right? So for those of us who might be sitting there saying, well, wait a minute, I applied for this money, I got to pay my people, or how am I going to keep operations moving? This is a big part of saying, like, let's look at the things that we have on our shelves, or let's look at our production capabilities and say, what can we do now that can help us, and not count on getting money from say government sources or any other kind of a bailout. Some of us might need it, but sometimes there are ways to find it without having to rely on those other sources. And we just need to be a little bit creative now, I think. And if you get it, great. I'm personally not counting on it for our business. We're adjusting also to make sure that we're finding the best ways we can to communicate and give resources to our clients and the community. So sorry to interrupt you there. I just wanted to put that out, that it's really, this is a really important time to think, and to not think, oh man, we're not getting any money for our business, we might have to close, and instead shift it to how can we adjust our capabilities as a company to meet maybe some new demand, or use current products that we have to join with with new products. So, okay, we can go ahead and continue. I sorry about that.
No, I think it just goes to the element of it. I mean, it's a matter of addressing the needs and monitoring what we have and what we can do. But I think there's also a point there. I think from a standpoint of small business and whatnot, we understand that it's in many cases for us, it's about self-reliance. In many cases, it's about what we can do. I think we're all by nature and small business very, very positive and have positive outlooks and positive belief. That's how we got into this. That's how we started this. And we know we can rely on ourselves, we rely on our organizations, we can rely on the people we have in our companies and the people around us, and we'll all and we'll come out of it better. Obviously, the other aspect, obviously, in terms of we can do something by which to increase revenue, is also the ways by which to reduce cost. Obviously, then all spurs back to keeping more cash. In many cases, there are a lot of efficiencies of operation that can be looked at. And back to my previous example is invoicing processing being done as quickly and as efficiently and as well as it can. Are there redundant tasks or processes that we have that are into things that are being done that are slowing it or actually adding cost by that we now realize maybe from the standpoint of remote and how we have people positioned, that maybe we don't need that anymore, that we can divide up tasks a little bit better, and not have that redundancy. And I think in many cases you will find that people in your team, some of the best ones to talk about improvement areas, about where those redundancies are, where some that can be eliminated to make things operate and run smoother. And it is about the fact right now we're focusing on those items that are critical. What are the critical tasks that need to be performed? Those are the ones that should be first and foremost in terms of what's being done, not so much what we necessarily need right now or want right now with that. You should have within your banking structure and setup, you should have a personal banker, business banker that you are set with within your bank, you have a relationship with, that is your go-to. Not an 800 number, not somebody randomly that you just matter who you get, but somebody who knows your business within your bank. If you don't, that's probably a relationship that needs to be explored or to be looked at. But the thing with bankers too, it's easy to be afraid of them, but being open, sharing, and being forthright with the banker is huge. They can't help when they don't know what the help is necessary, and they also do not like surprises. There's an old, actually heard this from a banker, an old joke. The business owner who knew he had a payment to make to his bank the next day, and he was sweating because he didn't have it and he couldn't make it. So it's 2 a.m. He's up. His wife is not happy because she obviously wants to sleep and it's late. He tells her what the problem is. He says, well, what the heck? So she picks up the phone, calls the banker, leaves him a message and says, hey, just, that payment is supposed to be made tomorrow. We can't make it. We'll have to talk about it. Good night. He was all upset with her over doing this. How could you possibly call and tell the banker, John, I can't make this payment tomorrow? She said, it's his problem now. Turn off the light and go to sleep. We'll deal with it tomorrow. So again, it's the point of, that's a little drastic, but the point being is talk with them, communicate, let them know what's going on, where you may be, what you can do, and not to have, again, just like anybody else, nobody likes surprises. People can deal with things and things to be dealt with from the standpoint professionally along those lines. Obviously, most businesses should have a line of credit from their bank. It's more designed, obviously, as a safety net, not something that you ever necessarily want to use. But then obviously there's going to become other things relative to reporting to the bank with that in terms of certain agreements and certain ratios and covenants, things that you have to meet to be able to prove. So again, but with other aspects, it's a matter of knowing, like it's on the board in terms of your capital investments, what is more saleable or liquid that can be turned or sold if need be, versus locked. And again, in looking at, we just touched on the lines of credit, other aspects of looking at aspects if we need additional inflow. Is there a way to get it from a debt financing standpoint? Is there a way to get it from additional equity ownership infusion standpoint as well?
I am sorry to cut it in here again, but I just wanted to.
That's what it's for. I'd rather this be open. Maybe I can cut in.
Yeah, capitalize a little more on what Rob is saying about the banking relationships. You know, right now, whether you're actually a business or you know, service provider who deals with clients that might have some of these cash flow issues, right now, bankers should be our best friend, and that is your commercial bankers that hopefully you've forged a relationship with. Any of us that have good relationship with commercial bankers, you know, this is the best time to be talking to them to know, you know, first of all, they're all overwhelmed, and they probably will be for the next few weeks. But also that if you're struggling in your business or you know someone who is, you know, this is the time to let them know what you're seeing, what you're going through, what you're thinking, because the companies that don't communicate with their bank are the ones who get the doors locked when they're not expecting it. Instead of going through the workout process. When I was at Key Bank, you know, we had a very good workout process that we used back in 2008 when all this went down, when the housing market went down. And I know that real estate's much different than, you know, than corporate life, but the same principles apply, where if somebody called in our workout department and said, we're struggling with our mortgage, we're going to go through the process and identify the best possible ways we can help you. The people who ignored our phone calls when they were delinquent were the ones that were foreclosed on and then wondered why they weren't given help. Well, you didn't reach out. And I know it's really hard for some people to reach out. It's kind of a prideful thing, but those of us who stay in contact with our bankers and let them know about our situation, are the ones that are gonna come out a little bit more ahead than those who remain quiet. So, okay.
I think big things also come to light with all this, obviously, are insurance policies and what's in there and what do they actually cover. And especially with everything relative, obviously, to COVID-19, it's one thing for health insurance, but there could be other things relative to property and casualty insurance, and even within the operation of the business. So, but quite frankly, reviewing insurance coverages and reviewing insurance is something really probably should be done annually. There should be basically an annual review to understand and know what your coverages are, what the limits are, where the premiums are, what they're coming from, how it's derived, and in many cases being able to shop that in the marketplace to make sure that you have what is necessary and what is proper. The other thing I think is big too is in many cases is reviewing rental contracts, is reviewing maybe certain contracts you might have with partner supplier vendors as well as customers. Are there terms in any of those contracts that allow relative to what this slowdown has been, or are there still requirements built into certain vendor contracts and customer contracts that you have to meet, or the company has to meet, or has to provide a certain level of that you need to make sure you can continue to do so as not to be penalized. But again, those are all items that you need to realize. The business should realize the terms and realize still what they need to do. There's many cases, even though it's not necessarily as usual, but there's still a part of business as usual, and business still going on. That still needs to occur, needs to happen. And I think the final point obviously gets into the other things coming through too, particularly like with cleanliness. There are going to be some rules, and there are some rules currently somewhat sketchy written from OSHA relative to cleanliness and what needs to be done within offices. I think more of that's going to be coming out over the next 2 weeks as they begin to allow business to open up. But there are going to be a lot of things minimizing risk from that standpoint, whereby business is going to be required for employees to be wearing masks, and they're going to be the provider of those masks. They have to be providing gloves. They're going to be providing cleaning throughout the day. There's been social distancing. There's also going to be work distancing. So there are other avenues by which now risk is going to come into play for businesses, and ways by which things need to be adhered to minimize that risk. So
Additionally,
I'm
sorry. Additionally, there with the risk that I didn't put on there that I thought about after the fact is information security is always a big thing, but that a lot of us are working from home, and my wife, for example, works from home, and she works at Rockwell. She's an admin and has a lot of things going back and forth over our internet connection here, right? And she logs in with a VPN. But there are a lot of things there to think about security-wise for anybody who has a company that has employees working remotely. And I know that was a big thing a couple weeks ago, but it still should be, to think, okay, we're all going to get back to work. What if this happens again? How can we be ready security-wise to make sure that we're not at risk when it happens? Because if it happened once, it could happen again, right? So we should all be ready from everything that we talked about on this slide, as well as also the IT risks as well. So.
And there definitely are the cyber issues, but there's also going to be a point too. There are probably going to be people that are going to workers who are going to want to work remotely or still not going to want to come in, and that is supposed to be allowable. Those, as long as it can be done, those concessions are supposed to be made and allowed for as well. The main portion really within a budget setup is know your costs, know your expenses, know your payouts, know your revenue, know your sales, know your inflows, and be rational. Have rational thought with it when you try to make out a budget as to what you need to pay out and what it's going to be. You see it through very objective eyeglass, not not an emotional aspect. It's not about maybe who you like or you don't like. It's about where's the most need and what does the business need. Talk to advisors, talk to business confidants, talk to your team as well. If you need to bring in consultants, then bring in consultants to help from the standpoint of budgeting, and importantly, a 13-week cash flow projection. And one of the things, obviously 13 weeks, because 13 weeks actually is a quarter. So the idea is to be able to look at a quarter out. But then as you do a 13-week, you kind of keep adding additional weeks. So it's always constantly, it becomes a rolling 13-week one as well. And that you can then track and see, and off of that too, you can start to begin and be able to see trends. So you're going to know and be able to know, you're going to be able to see within that what weeks within there are consistently your high point cash-wise of need, and what weeks within there typically are your lowest point of cash need, and where maybe some middle ground is, and maybe look at to see, are there ways to smooth out those highs so that you can even across that board a little bit more. And the idea of from that are making changes and making adjustments. But it is a budget, so there are going to be things that are going to come up that you didn't expect. You have to put them in there, and you got to make an adjustment for it, and then make the changes as necessary to make that fit. And so again, it's the matter of constantly monitoring it. If it's something, if there's a business owner, really should be reported to the business owner. If the business owner wants to do it themselves, that's fine. But if not, you need to have somebody that you're going to assign responsibility to, and then obviously ensure the reports to get done, and ensure from your standpoint of when you want to see this new report weekly or daily, from the standpoint of having it. There are ways and things you can do within it too, from the standpoint of looking at what your daily cash is, from the standpoint of what your beginning balance is for the day, what you have coming in deposit-wise, what you have paying out deposit-wise. You constantly kind of keep a tight monitor on what your cash position exactly is, and then obviously realizing might still be out there that's been issued, that's still floating that needs to clear as well. So it's a very much it just needs to be a concerted discipline that needs to be. I think the thing that has to be looked at is, well, I think going back to Ryan says, we can't necessarily count on all these government loans coming through. We can't necessarily count on the government obviously passing more by which to fund those for more. And so we need to be, vigilant from that standpoint on our own and set up what we need to do to go through. I think just another thought, another perspective too, a little bit, that's not up here, is a little bit on being vigilant with fraud. With most of your banking system structure, you should have online banking and be able, and bank services by which you can log online and be able to monitor and see all your activity that's going on today, from clearouts of checks and clearouts of ACH debits and deposits that are coming in electronically, or deposits that you made there. That's something to be looking at as well. But the other thing that I'm a big proponent of is all banks have what are called a positive pay program. It is a fraud protection program. It is for checks. It can also be for ACH. It basically makes you have to register, for example, a specific check, so nobody can take a draft or issue something that isn't authorized or approved, so that it clears. By that, there are ACH transmittals like that now really should require dual approval, where one person, everybody's kind of remote, not in the same office, so to speak. One person can initiate having that ready to go, and then somebody else needs to approve it for it to be sent out. Banks are also allowing offer services actually in terms of doing checks, where you can set up within your online banking to issue payables to specific vendors. The bank will process and send out the checks, rather than having to worry about how you're going to print checks, how do you get to who's supposed to sign them, how they're going to get mailed out. And again, it's the type of system whereby you can set a two-tiered structure to it. One person can go in and select, decide who to pay, and then somebody else can go in and then approve those for the bank to release them. And obviously, if their company credit card is being used, that use needs to obviously be monitored as well. There should be obviously the approval setups, and in addition, merchant fees should be kind of watched and maybe gauged and maybe also evaluated on a yearly basis to make sure that they're not overly expensive or costly for the business. And obviously those statements too need to be reconciled and verified as to what was charged and what was done on them. So I think just in the end, I think as Mike Ryan, who actually I think is listening on this call too, is one of his favorite sayings that I love too, is that cash is king, and cash is king at all times, not just during this crisis, not just during an economic slowdown, but for all times.
Great. I have a couple of questions that have come in. And Rich Rosman, thanks for making your comment, first of all, down in the chat box, was don't be afraid to ask your insurance broker which ways the premiums could be reduced due to decreasing sales forecast, inventory levels. So good suggestion, Rich. Thanks for putting that in there.
Yeah, excellent point.
I also had another question here. Can cash flow be sheltered by depreciation?
Cash flow typically is not going to be sheltered by depreciation, because depreciation actually is an expense. When what you're doing at depreciation is, if you're buying something large capital-wise, a $20,000 piece of equipment, instead of expensing that $20,000 on your income statement today, if the life of that equipment and what it's going to provide to the business is, say, over a 7-year period of time, then in essence, you're going to take about $3,000 of that expense over 7 years and apply it to your income statement. So there really isn't necessarily a direct correlation between depreciation and cash. You're still somehow going to have to make a cash outlay for that $20,000 capital equipment, whether you do it purely straight with cash, whether you do it a mixture of cash and some element of debt financing, would be two ways, or two plausible ways by which to address or to do it.
Okay.
I would also very much suggest talking to your CPA about that question too. We're not necessarily tax accountants. So, that it's a very good question for a good CPA to be in on the answer to that.
Okay, great. So I have another one here. So maybe could you have a little more discussion on examples of how to handle the areas of cash management in a crisis mode? And John Steigerwald, if you're, I can unmute you. So is there anything else you wanted to add to that?
Hey, Rob, and I appreciate you guys doing everything you mentioned is 100% on target from a general overview of handling cash. And so here's my reason for sending this to Kim is this is two things. One thing I've learned over my 43 years of corporate business and private business is that now's the time of how well you know your customers and how well your vendors know you. And being able to balance that teeter-totter in a very dynamic and customized manner. Most of my life, our products moved through the transportation industry. And if you've ever had a client base that is more challenging than the automotive business, it's most probably was a great practice. So the example I have is the last time we had a crisis like this was 2008 and 9. And I'll try to spur your thoughts here in a minute. Our business, my private business at the time, we immediately went into crisis mode. Every section you just did an overview on, we basically profiled as part of our business. And the fact is that discipline was prior to that activity. And as a result, we went into weekly reviews of those areas as we tried to do. And then we became Italian suit customizers with customers, knowing that they couldn't pay us, of how we could maintain some kind of flow of cash from these types of customers while we went to our vendors to do the same in a way to try to balance that flow at the end. And then also know that some of our customers in 2008 and 9 were heading into bankruptcies, which potentially can occur during this period of time as well. And then we basically had to understand how where was the most critical positions of sorts and how we would try to deal with that, because you guys know that if the company goes bankrupt and they actually paid you, 2 weeks before they went bankrupt, they can claw back to some levels, depending upon the circumstances. So in essence, the crisis mode includes all of these items. The attack mode on those items become dynamic. And maybe it's for another session, but I sense that you've hit on all of them, but the dynamics of each one of those during this crisis mode most probably takes some very strong, even to some level, microscope kind of details as you're trying to dissect this process for the next, however long it might be. We always started out with immediate worst case, and then we relaxed it as things relaxed to basically open it up. I'll leave it up at that to try to give you some background of why that was brought forward.
Thanks, John.
Rob, just correct me if I'm wrong on any of this, but I think the very first thing to start with is the 13-week rolling cash flow projection, and that you're identifying what's coming in and what's leaving and cutting out what you don't need and making decisions on, do you have to lay off? Do you have to cut certain costs, and where are they? So if you do it 13 weeks out, the later weeks are the hardest to do. The earliest weeks are the easiest because you know what's kind of coming and going, and to make decisions about, we're going to have to work at 80% capacity, 50%, 40%, and here's the resources we need to do that. So in my opinion, and I'm sure Rob might have something else, that's the place to start.
Yeah, I think that John does hit from the standpoint of, in terms of even from the standpoint of being able to see your current scenario, even worst case scenarios as things filter through, is the 13-week. But I think the other issue right now, though, with all of this that to me is different, than 2008 or 9/11 or the 1992 recession, the dot-com burst, or the 1987 stock crash, is the fact that a lot of that, there were economic factors and a lot of things involved in previous ones, except for 9/11, that kind of precipitated a big decline in the issues. This one, from this standpoint, really now is more of an unknown, and it's also more government action that kind of has forced us into where we are. It's a virus, and obviously the terrible possibilities of it, and what the bad omens and things can be from it. But it's also the standpoint of government standpoint really closing down most businesses and determining which ones are. So I would focus, yes, on a 13-week cash flow is good. But I always was big from my standpoint too, is was also kind of looking at it daily. I looked at it daily from the standpoint of having a little spreadsheet set up from the standpoint of what I knew my beginning balance of cash was for today, what I could tell off my online banking that I knew was coming in electronically, or checks that I'd received that would have to be deposited, as well as what I knew I already had to pay out that maybe initiated from an ACH debit standpoint payment, or checks that I knew had already written and mailed out that I knew had to clear out, so that I constantly always knew real time where I was from a standpoint of cash balance, from a standpoint of being able to hawk it and knowing how to plan and what to do. And I think it does get to the point from what John Hill a bit too, is the fact that then you can see those trends. If you run a 13 week, because it keeps projecting, you're going to see those trends, and you want to be, you want to be detailed with it. You need your payroll in there for when the weeks that it's supposed to hit. If you're in transportation, you're going to have some elements, probably a fuel cost weekly that you're going to have to make and pay that you need in there. You're going to want rent. You need to list utilities. You need to list every expense you're going to have, and maybe some you can lop quite a few together if you want to kind of shorten the list. But again, that way you'll know historically from what you've had to do. You can see how it obviously is spreading out, but you'll have an understanding of where your position, where your cash needs to be. And I think, and off of that, guys, then too, it may point you to things I think that John alluded to internally to look at. Maybe again from the standpoint is your payable cycle, are you paying out too much, or paying things out maybe too quickly, or are there payables that you get that are actually associated with revenue, and the materials that you buy that you're brokering out, and are those getting entered into payables first, maybe getting even paid first before you've even finished processing an invoice, so you're off a little bit relative to your receivables to your payables. So maybe those type of things that kind of come up into light as you look at that, and as you delve into it, as you start to factor with it.
So I do have one here, and this is a question for everybody on the line. Again, if you just use your little reactions down below, how many of you applied for either the PPP or the EIDL? It doesn't matter which symbol you use. Okay, I would say probably close to almost everybody on this call. So where does the interest paid on bank loans get reported on the statement of cash flows? So we know that the PPP will be forgivable if we file the application for asking for the forgiveness, and we use the funds for the forgivable portions or the allotted amounts. And the EIDL will have interest. So where does that get reported on the statement of cash flows?
That would just be interest expense.
Okay.
I think internally you would keep that as interest expense. I mean, that might be a better question standpoint for for the CPA, because they're not. I mean, there's a portion that you have to pay on the interest. I'm not aware of the fact that they're going to pay you back the interest. They're just going to forgive the. Well, actually, that stuff is deferred. So quite frankly, on most of that, it should be forgiven before you have to make interest payments anyway. But within the cash aspect, it'd probably be a good idea to go ahead and estimate that in there. Because the other thing is being proposed too, with a lot of cost you can be affiliated to COVID-19, is creating a COVID-19 general ledger or coding in your record keeping to put costs solely associated with COVID-19 into. The point being, obviously, they're going to be in there for 2020. They weren't in there for 2019. So when you compare those two, it kind of isolates more a new, so to speak, event, or a one-time event that occurred this year that obviously wasn't there last year from a planning process and planning standpoint. But for the most part, the interest on that really would just go to interest expense.
Okay.
Yeah. Also, really, like Rob said, that's absolutely the answer, and I'll just back it up with what your CPA suggests. Also, accountants are working just as hard to make sure that they're helping all their clients account for it correctly. One thing that we've heard, along with the setting up a separate account in your ledger, is to have a separate bank account specifically for the funds that you receive. So you get money from the EIDL or PPP, just immediately open up a bank account for those funds to go into and distribute from there. That way it's also easily tracked. So if you have a separate a ledger account plus a bank account, and then you can easily track any interest that's related to those expenses. Those are just really good practices that we're hearing on other webinars that we've been a part of as well. So.
Okay, great. So one of the questions that I had was, how do I even know my cash flow is correct? And I just got a question in that says, what are the typical issues that you see with clients preparing their own cash flow? Do they typically forget to add something, or divide by 12 to an account for a one-time a year expense type of situation?
Well, I mean, it's like anything else. It's not an exact science. So my first thing to say is, if chances are something might be omitted or might be forgotten about. But that's the idea then of adding it in when you realize that was the case. And now you might have to make some, it might obviously change the numbers and have to make a bit of an adjustment there. I think maybe the biggest thing, quite frankly, to start it, I think the biggest thing to start it really is just starting getting the information. So you're going to need, obviously, to want to have what is your cash balance. If you're going to start it today, what is your cash balance today? What was your ending cash balance on Friday that you had, that now you are starting with from that standpoint. It's going to be a matter of you've seen receivables reports. You can kind of get a feel in your receivables for what you have coming in, yet or what's going to be there. And it's a matter too, it's a matter of specifically, obviously, what you've already issued to be paid out. Are there certain ACH debits that actually are hitting today or tomorrow this week? Did you run a batch of checks? Was there a batch of checks that was run last week that was out the end of the week? They're going to clear out this week that you need to factor. But probably the bigger part more to begin with a little bit is gathering that information to start. But then once you do it, you'll know what you're pulling and have it in and be able to and be able to add to it. But I wouldn't. I would start building and start making it. And if there's things that you've omitted, fine, just add them in, and then realize that you. But then realize, obviously, you might have to make a bit of a change someplace if there was.
Okay.
But I think part of the point with anything on this, I think it's okay. As business owners, we don't have to know all the answers and have to be able to do it all. We can have people and advisors, other people help us with that. And it's okay to need to help. It's okay to ask for help as well.
Yeah, I think that also the first couple weeks of estimating your cash flow shouldn't be difficult to think about. I mean, yeah, it's not an exact science, but hopefully you know what your costs are 2 weeks out, and you know what's going to be coming in the door. If you don't, well, I mean, I don't know. I mean, you might need some help, and that's okay. But ask for it. 13 weeks out is hard to estimate. I mean, it's hard to estimate for even a business that's been in business for years and years and years. I mean, maybe sometimes not, but if you're maybe a 2, 3, 4, 5-year-old business, you might not know what's coming in 3 months from now. So that's going to be a little more of a guess. But in the first couple of weeks here, you ought to have an idea, or at least be able to estimate. And if you want to really try to think about a worst case scenario, do a multiplier to reduce the cost that you come up with by, say, like 20%, or reduce your revenue rather by like 20%, and see what you come up with as far as what you have left over, and maybe make decisions based on what you think you might lose. I mean, that could be a good way to try to estimate better.
Okay. So one last question on handling creative accounts receivables, payment plans. What should a business owner have if they're going to accept payments on past due accounts receivable to work with the customer during this time, and what type of documentation is important?
I mean, I guess it depends upon how you feel with that customer, how maybe even long term they've been. But I would say if you're going to allow some changes and extensions out to what regular standard terms are, would be to have, even if it's just an email, to have an agreement and response from the standpoint in writing of what that's going to be. I don't think it needs to be anything majorly formal, from that standpoint, but just to highlight the conversation and what was agreed to, and what that timeline is.
Okay, great. So you both, I really appreciate you doing this morning. You've really hit on some great ways that we can look at our cash flows, some great habits and ways that we can move forward. I wanted to mention, you hit on a couple of things that I just wanted to share with those on the line. Security and technology. We did do a session, 1 week has run into the next, so I think it was about a week and a half ago. We did it with Ashton Technologies, which is a GGP member company, and they really went over a lot of security and technology issues, and that is recorded and on our website at giagagrowthpartnership.com. If you just go to the COVID-19 resources tab, you can find that recording in the live recordings there. The other item that you touched on was really kind of talking about new lines of business and how do you do that. And our annual meeting, which will be held on June 23rd, we're really fortunate to have Christopher Mates, who will be joining us, the CEO with Lincoln Electric, and he's going to be talking about offensively positioning your company for success and the ways that Lincoln did that in the last recession and how it benefited them. So two topics you touched on, I think that are really important and very relevant to some of the things either we have coming up or we've already done. So that's great. Any final parting words?
Rob?
I just say don't take it as this great big crazy daunting task. I think just again be vigilant with it. Realize there's still a lot to go through yet. Nothing just because economies start to open up May 1st doesn't mean it's going to look like we did on March 11th and March 12th. But I think it's a good point from the standpoint of looking at your business, looking at what you want to do, and putting in procedures that will help. I mean, managing cash, like I said, it's necessary in boom times too, because cash is finite. It doesn't grow on trees. We have what we have and have what we get.
Great.
Yep. Yeah, and I would add along with that we're all going to be facing some challenges other than cash, which are things like when we get back to work, what are we as business owners going to have to provide to go into maybe a client's facility, or what are the, as a business, what are you going to require outsiders coming in or your employees? And this is because it's not May 1st yet. this is a good time to really think about what you need and how it's going to impact your business. So.
Yeah, that's great. You'll hear a lot more from us coming out here in the very near future about some of those how to get ready sessions on what we need to be thinking about once we walk back through those office doors again. So thanks so much, gentlemen. We want to go ahead and also thank our sponsors today, Geauga Medical Center, and our event sponsors, Senator John Eklund, Farmers National Bank, and Connecticut. Next Monday, we're going to hold another forum, but we'll have this as an open forum. So your cameras can be on and your microphones can be on. But what we want to do is just bring lessons learned, shared experiences, best practices to the session so that you can share those with other small businesses. If you have things that you'd like to share in advance of that session, please feel free to send that to us at info@geaugagrowth.com. And again, don't forget to check out our website at geaugagrowthpartnership.com. And we'll continue to build more sessions as we go forward that are hopefully relevant and meaningful to you as business owners and employees so that you can be prepared with what's coming down the pike. So thanks so much, everyone, for joining us this morning. The sun is shining. It's beautiful blue skies. So get out and enjoy a little bit of that today while we have it. All right.
Thank you.
Have a good week, everyone.
Thank you.